Hello and welcome to HiWayFX market news for February 4th, 2016. Yesterday, the American dollar suffered its largest one-day percentage drop outside the crisis of 1998 and 2008, symptomatic of just how crowded bullish positions had been. As a result, the euro-US dollar pair surged to 1.1145 with growth over 2%. As Reuters notes, the American dollar tumbled due to speculation the US Federal Reserve might opt to not raise interest rates at all this year. Traders were unsure what triggered the dollar rout, though many pointed to comments from Federal Reserve Bank of New York President William Dudley that tighter financial conditions would be taken into account at the next policy meeting in March. In an interview with Market News International, Dudley also warned that a sharp rise in side dollar could have significant consequences for the US economy. Investors took that to mean the Fed did not want to see the currency rise any further and might delay further increases in interest rates. Future markets had already priced out almost any chance of hike in March. The resistance levels for the euro are 1.1248 and 1.1305. The support levels for the euro-US dollar are following 1.1007 and 1.0951. On Wednesday, the yen continued its growth against the American dollar. Only yesterday, the rate of US dollar Japanese yen changed from 120 to 117 yen per dollar, or over 2.5%. It is the biggest daily drop since August. As Reuters reports, the fall wiped out all the gains from the Bank of Japan's decision to cut its rates below zero, a tit-for-tat response that only added to market suspicions central banks were engaged in a war of competitive depreciations. The resistance levels for the pair are 118.25 and 118.83. The support levels for the US dollar Japanese yen are following 117.75 and 117.26. Today, gold surged to the level of $1,140 by adding over 1%. It is the highest level for the last 3 months. As Mark O'Brien, research director at Goldcore, says, that gold found support from increased concerns about the economic outlook after the weaker-than-expected ISM data showed a slowdown in the services sector in January. This would suggest the Federal Reserve will be more likely to put interest rates on hold. If volatility continues in the stock markets, we can expect to see a safety bid in gold as investors look for some place to put the proceeds from what they eject from the equity positions in their portfolios, said Adam Koos, president of Libertas Wealth Management Group. The resistance levels for gold are $1,145 and $1,157. The support levels for gold are following $1,137 and $1,130. Stay up to date with all the key financial news around the world by liking us on Facebook, following us on Twitter and Instagram, and subscribing to our YouTube channel. For more information, please visit our website www.HiWayFX.com. Thank you and have a good trading day.